Hello. Yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. Today's webinar, basically, we just want to look at the best strategy for a beginner. So not exactly a beginner, for someone who is doing intraday trading. We'd like to look at the best strategy that you should use as an intraday trader. So there is one thing we need to understand, first of all, what an intraday trader stands for. So if you're that person who, whenever you enter trades, those trades run maybe for 2 hours, 3 hours, but they don't extend, they don't overlap to the next day, then we say that you are an intraday trader. And if you're that person who, whenever you enter trade, the trade lasts for just some few seconds or some minutes, but do not overlap into an hour, then we say that you are a scalper. But if, on the other hand, you're that person who, whenever you enter any trades, those trades run for maybe 2 days, 2 weeks, or even sometimes months, or even sometimes years, then we say that you are a positional trader. So today, basically, our main aim for today is not to look for the position traders. We also don't want to look at the scalpers, but we want to look at those people who they enter trades and then maybe the trades run for an hour or two or something of the sort. So we are not measuring so much on lesser time frame trading. I mean on higher time frame trading. What we'll be doing is maybe 30 minutes. We'll be doing 1 hour, and in very rare situation, we'll be looking at the 4 hour candles. So one thing, if you look at my screen now, you can see what's happening. You can see this is Ethereum. We are not going to look at this anyways. We just have it on our screen. We'll look at the 1 hour chart. I'll look at the 4 chart. So there is something which you need to understand, that even with the best strategy, even with that strategy which you consider as one of the best, what makes the strategy actually the best is not the strategy itself. It is which risk strategy you implement in that strategy. So how you control your risk determines how successful your strategy is. It's not the other way around. So do not find yourself in a situation where you enter like a trade and then you start calculating how much you know with that strategy, how much you expect to get from that strategy. No. Calculate how much you are giving to the market first of all before you do anything. So the idea is to ensure that you understand perfectly well how much limits you have that you're giving to the market. How much are you giving to the market? That's the most important thing. So like if, for example, if I have something like this here, if I have this level here, this is a very good, it looks like it's a good resistance level. So assuming it is actually a perfect resistance level, when the price breaks beyond this resistance level and then it attempts to come back, if the price ascends above a level like this, if it goes above, then it comes back and touches that level. When this happens, when the price goes up and comes back and touches the same zone here, what happens is this. Before you enter a buy position here, this is a perfect example for breakout. Before you enter the buy position, either here or the next one, the most important thing is to see to it that whatever, if the price goes against you, look at the negative side of it first of all. If the price goes against you, what is the worst it can do to your account? So first of all, understand how much you are risking, how much you are giving to the market. If whatever you are giving is just a small fraction of your account compared to what you expect to be getting, then the trade it's worth taking. But if whatever you're risking is way beyond or is more than a half of whatever you have in your account, then there is no need of taking it. So this is the first thing, because if you're not careful with, if you're doing intraday trading, but you end up picking trades that are risking most of your account, then you'll end up blowing your account in a day, and you don't want to do anything like that. You don't want a situation where you open the day with a good balance, then you exhaust it before the close of the day. That's not what I think you want. Does this make whatever I'm saying now, does it make any sense? Does it make any sense? Okay, so the first thing you need to understand is how much are you risking in your account before you think about doing intraday trading. For every given trade, you must understand how much you are giving to the market, how much you are willing to risk to the market. So that's where the winning game starts from. You must know how much are you willing to risk, how much are you willing to give to the market before you go ahead to understand how much you are risking. So my favorite strategy for the intraday trading is actually the breakout strategy. So the breakout strategy is where you have like a level here. We have some resistance level here. Then the price leaves from the bottom, heads straight to that level, continues down, then it comes back to the same place. So remember, this is a resistance zone. The price goes down and then it continues up and eventually breaks and closes beyond this level here. So when this happens, when this happens, anytime you have like a level like this and then the price breaks beyond it, you want to see price pull back to the same zone before you can pick a buy position. So when this happens, if this happens, then this here will give us the ideal place to look for a buy from. So if the price gives us a resistance here, then it eventually breaks beyond this level. We'd like to see price pull back to the same place before we can pick a buy position. So whenever there's a resistance level like the one which I've just drawn here and the price ascends beyond it, don't just enter trade at the top here. Do not just buy when the price is here. Wait for price to pull back to the same point. And another thing, do not just enter trades just because the price has pulled back to this level here. No. Wait for a clear sign that the price is not able to break below the same place from the top. So that means that you'll wait for something like a pin bar here, which is closing above this level. You'll wait for an inside back candle, which is closing above this level. You'll wait for maybe an engulfing candle, which is closing above this level. Those are some of the signs which indicates that somehow this will act as a good place to look for a buy from. So you can buy a position, but then your stop loss is fixed at this price here, below this low here. Does this make sense, whatever I'm saying? It should, because it should make a lot of sense, because I've tried this strategy on my own. I think it's one of the finest which I've seen so far, because whenever you have to sit down and wait for price, you tend to get much better signals than if you're just trading anyhow. So we'll look at another good example for this one here. We have this, just a second. We have a resistance level here. Have one there. Then have another one here. So look at how nicely the price went up to this point. It formed a resistance. It formed a resistance. It went beyond this resistance level. It continued higher. Then it came back to that resistance level and then gave us some bullish pin bar candles here. So basically, when you see these bullish pin bars, these are the correct signs that you're supposed to be buying. So if you were monitoring this level when this was happening, you could have noted this as a resistance, the second one as a resistance, then you could have seen this as a breakout before the price came back to give us a good buy signal here. So basically, this here will act as the correct place to look for a buy from. Whatever we have here will act as the ideal place where we'd like to look for a good buy from. So the other thing which is developing, the other level which is developing is this one here. You can see how nicely it is a resistance. It was used previously here, it was used here, it was used here, it was used here. So if for some reasons the price goes up and closes beyond the entire zone, then while the price is at the top here, we are least interested. When the price is here, we are least interested, but we are actually taking note that we had a resistance here. So when the price comes back down to this point here and touches this resistance support level, then we'd like to pick a buy position from there, expecting price to extend itself to the upper side. So basically, this is what I normally trade. I always want to see price break beyond a level clearly, then the price must pull back to the same zone clearly before I can pick a buy position. So I don't also just pick buy positions here. I have to wait for those clear signs that it is true that the price is struggling to contain itself or to break below this zone here. That's when I pick a buy position. I hope that makes some sense. So the example which you've looked at so far are just buy examples. For a sell, you want to see a developing support. That is, you want to see price move down and touch a support, then bounce off from that support to the upper side, and then continue down, and then continue up, and then continue down and even close below that zone, and then it should retrace back before we can continue down. So technically, if you are looking for something like this, if you are on a chart like this, then this here will act as the correct place to look for a sell from. This is a sell place, and then you have this one here also as a very good place to look for a sell from. So this is, you can see that it's exactly whatever you're looking at when you're looking for a buy position, just that it's now opposite. It's the opposite of whatever you had before. The other time we are looking for a buy, a break beyond resistance level. Now we are looking for a break below a support level. So anytime you see this happening, anytime the price moves down and then establishes some support here for the first time, the second time, then it goes and breaks below it. You don't just enter sell when the price is below this level here. That's when the price is somewhere at the tip here. Instead, wait for price to pull back and touch this zone somewhere here. Then you pick a sell position, expecting a move down. If it pulls back again to the same point, then you pick another sell position there, expecting that sell to take price even lower. So we'll sell it, and then you have our stop loss here. You have our stop loss here at 46.05.35. So you'll sell it here, you'll sell it here, you'll have your stop loss at the top here. So that should bring us, sorry, we've not looked at an actual example of this. Let us look at that first of all before we round this up. Just a second. Okay, sorry. So we'll have to get a good example explaining the same. Look at this. We have a support here. You can see the price from the top. It came back and touched this zone there. It pulled back up. Then it came down. And then it pulled back up. Then it came down with a tail and touched the entire zone. And then it continued up. And then it came down to the support. Then it continued up and touched the same zone, and then it went down, continued up, then it went down, so continued up, touched the same zone before it can continue down. So you can see basically whatever happened here is exactly what we explained with the prototype, the one we had before. We had a support, a support, a support, then there is this breakout. The price came back, touched the same place as a resistance. We had a resistance here, then we had a resistance here. So basically, this here is the correct place to look for a sell from. This is the ideal place where we want to look for a sell from. So as long as the price is held below this point here, this was a good place to look for a sell from. If you sold it there, you can see that the price went straight into money, and I'm sure that whoever sold it here actually had its take profit taken. So our stop loss is above the recent highest high, at least above the top, which is somewhere here. Then the take profit can be twice the distance from this point here up to the first peak which you had here. So that can be, we can have this as the take profit. So let me try find out where we have it here. So you can see that the price basically went up to that take profit, touched it, and then bounced off from it. So the other thing is, if the price goes back, if you sell it somewhere here, then the price goes down and touches this tip, you can basically just drag your stop loss in money so that you break even. And if the price continues down, then you can now trail it slowly, at least up to this point here, then continue monitoring it, expecting price to continue in the same direction. So thank you very much. This should bring us to the end of today's analysis. We'll meet again tomorrow at the same time. So thank you. See you.